best parts. For discussion today is Australia's record-breaking labour market. On the agenda, we'll review the ABS labour results for January. Then we'll delve into how this is the tightest job market in generations. We'll also explore the role that closed borders have had to play on the job market. Then we'll look at what this means for wages and the likely implications for interest rates. And of course, as always, we'll cover the investment implications. My name's Sam Kerr, and I'm the Senior Financial Advisor at Nucleus Wealth. As always, we have the Head of Investments, Damien Klassen. Damien, welcome. Thanks for joining us today.
Thanks, Sam.
And we also have Leith van Onselen, the Chief Economist at Nucleus Wealth. Leith, how are you going today?
Good, thanks. Good to see you guys. First potty for the new year for me, so it's good to be back.
Happy days, happy days. Just a quick reminder before we get started. If you enjoy our content, please subscribe to our YouTube channel and click the bell below to be notified when we go live or have a new episode recorded. Alternatively, you can follow us on your preferred podcast platform. Our show's available on all the majors. For those of you listening live, feel free to drop your questions in the YouTube live stream chat, and we'll do our best to answer them during the show. So now that we've got that little bit of housekeeping out of the way, we'll get into it. So Damien, I'll hand it over to you to get us started.
Well, actually, no, I'm bouncing it straight to Leith. Leith's in charge for this one. I'm just here to throw a few questions in as we go.
Yeah, well, thanks very much, Sam, Damo. Well, this podcast is a bit of a hot take because at 11:30 this morning, the Australian Bureau of Statistics released the January labour market results for Australia, and it was another good result. Bear in mind that in January, and so the January market survey, the January survey captures the economy between 15th of December and 15th of January. So as we know, that was a time when we were hit pretty hard with the whole Omicron wave, and there was a lot of there wasn't lockdowns across the country, but there was sort of these pseudo lockdowns where a lot of businesses shuttered, activity was quite down. We obviously had all the testing problems, etc., etc. So you would expect that to impact the results, but thankfully it hasn't done too much carnage. In that the Australia's headline unemployment rate remained at 4.2%, which is the same as it was in December. Now that's basically the lowest level since November 2008, so nearly a 14-year low there. We actually generated some jobs. We generated about 12,000 jobs in January. Most of those, however, actually all of them were part-time. We actually lost a few full-time jobs. The underemployment rate only fell by 0.1%, and that also remains close to the lowest level since November 2008, just above last month's level. And I guess the one dampener on this month's result was we actually had a fall in hours worked. So there was about an 8% fall in total hours worked, but that's to be expected, obviously, when you're having these pseudo lockdowns and a lot of businesses are shuttering, so you're going to have less people actually in work. But thankfully that didn't correspond with the fall in jobs. So it was by and large another very, very good result. And I've got to say, I'm 44 years old. I entered the jobs market in 1996, and I can categorically say that this is the strongest jobs market in my lifetime. I've never seen a jobs market as strong as this. Sure, we've had a similar unemployment rate in 2008 and a similar underemployment rate, but all the other indicators, we've got the highest employment to population ratio in history. So that means that the percentage of people in Australia that are employed is currently at its highest ever level. We've also got a record number of job ads per unemployed person, highest in Australia's history, or highest on record. So it's an absolutely booming jobs market we've got. So today I thought we'd just go through some of these figures in a bit more detail. So we'll look at a bit more detail in today's labour market results and how it sort of compares with history in a graphical sense. Also, I want to discuss the role of the closed borders. As we know, Australia's been closed immigration for 2 years. So the labour market's gone from employing about 180,000 plus foreign workers every year to actually losing foreign workers. So that's I want to look at what role that's having.
Yeah, do you want to let's bring up this first chart, this
Okay.
employment one, because I'd like to. I think what you're saying there is pretty well shown by that sort of total employment graph, isn't it?
That's right. Yeah. So what I've done here is there's been a lot of speculation. So I've seen it from various economists around the country who are trying to argue that the fall in unemployment is not due to the closed border; it's because of stimulus. Well, they're sort of partly right. Obviously, you know, all our governments deployed massive economic stimulus over the pandemic, and that stopped the economy effectively from going into a depression. So it filled the hole of economic activity. But as this chart shows on the left-hand side, it hasn't put the economy, or at least the jobs market, on a higher trajectory than it was pre-COVID. In fact, jobs growth, although it's obviously picked up, and the total number of jobs are slightly below slightly above the pre-pandemic level. The actual trend jobs growth's been quite weak, and it's well below the pre-COVID trend. Yet we've got this situation where the unemployment rate has crashed to 4.2%, lowest since 2008. The underemployment rate has also crashed, almost the lowest since 2008. So the question is, well, if jobs growth's lagged, and we've got a crash in unemployment, crash in underemployment, the employment to population ratio, which of course the denominator in that equation is the labour force. If that's gone to the highest level on record, well then statistically you can't argue that it's not closed borders. That has effectively driven this collapse in unemployment. So yeah, I don't know.
There's a few other questions with this one. So, like when you look at the surveys of people in terms of what they're in terms of what the reasons why they're not working, Australia used to rank quite high in terms of getting money from job keepers and all that type of stuff, but that's obviously all faded out now, or largely faded out. I guess I don't know how much you've seen in terms of the idea that there's people who have sort of dropped out of the workforce in order to look after kids that were sort of homeschooled and a lot of that over the last couple of years. And the idea that, well, if that was the case, you wouldn't expect them. I guess what we're thinking is, well, if that was the case last year, we're in and out of lockdown, and the year before in and out of lockdown and homeschooling, and so somebody's lost their job and ended up just saying, no, I'll stay home, mind the kids. It would seem to me that you'd start to see them come back into the workforce after, in February. So you got school holidays for January. You're probably not going to start seeing until February those people start showing up in statistics. I don't know whether you've seen anything on terms of that.
Yeah, well, certainly. I mean, there would be a bunch of people who are out of the labour force, but at the same time, I mean, I know anecdotally, and I can only extrapolate this across the population, but I know two people who've been out of the labour force for decades, who because of, I guess, partly because of the tight labour market, they're now working in cafes, etc. They've actually gotten jobs because employers are giving them a go, because they're not having to compete with, I guess, other people for these jobs. So it's actually breeding people out. And if you go to the next chart, the next slide, that whole sort of notion that people have dropped out isn't really matched by the data, because again, the chart on the right hand side here, I've plotted the employment to population ratio, and again, we've got more people in the economy at the moment working. Like the percentage of the population that's working now is highest in history. So that suggests,
no, I'm not. Yeah, I'm saying that it could be more than what we've got. I still think
for sure.
I guess what I'm saying is the surveys I've seen still say there's a certain amount of people not working because.
Look, and we're always going to have that. And look, the ABS estimates, I think the hidden unemployment is still about 1 million people. I think it was as of about a year ago. I think they only released a survey every couple of years, but they used to. The last one, which it's pretty old, said that there was about 2 million people unemployed if you count the official unemployment, and then there's like another million of sort of hidden unemployment. So there's always going to be a big pool of that, but I reckon I've got no data to back this up, except for the fact that the employment to population ratio has gone right up. I suggest that hidden unemployment has actually fallen quite a bit because we're now the jobs market's so tight. There's so many more opportunities, and people are getting opportunities that they wouldn't have got in a looser labour market. So, as I said, I know these two people. I'm not going to mention their names or their history or anything, but
so let me hear you on another one then. So potentially we've got more to come. So I guess what I'm saying is that although it's high, maybe it can get stronger. I suppose.
Oh
I
yeah,
guess
yeah, for sure.
what I'm saying. The other thing though is having a look and saying, especially January is a good example. Look, we were averaging. What was case numbers averaging there? Did we get to 100,000 a
Mate,
day?
January was unbelievable. So basically
Yeah.
mid-January was when we peaked. So
Yeah.
the active cases in mid-January were at the moment the active cases in Victoria are about 1/5 what they were in the January peak, and New South Wales
Yeah.
1/7. So they were huge.
Yeah. So I guess what I'm saying though, across Australia, it might have been 100,000 people a day, sort of mid January,
Oh, easy.
and that's just reported numbers, and then you
Yep.
go, so you can probably double that at least. So that gives you 200,000 a day. Across the month, there was probably 3 million people, say, across the month that were sick for at least a week or quarantined. And so I guess what I'm trying to get to here, and this is this is the one I feel is lurking somewhere in here, and also not just Australia, but globally, but I just don't know what the effect is that if you've got a certain portion of your workforce out sick, and in a stage where they genuinely can't come into to work anymore, then chances are you need to go and hire more people to replace it. So you actually need a bigger workforce than what you used to have, because you've got to account for the fact that at any one point in time, whatever it might have been, 2 or 3% of your people would be out sick, but maybe for the last month it might have been 5 to 7% of your workforce. And so I guess where I'm coming to is, I don't know what you've seen in terms of statistics that would sort of suggest that might be out there, and that's I guess that's an argument in the opposite direction, that it might actually get weaker as companies, as Omicron fades, and they're like, well, I no longer need 105 people to service me. I need 100 employees, but I no longer need 105 to cater for people that are sick. Now maybe I only need 102 going forward.
Yeah, that's possible, and certainly January we did have I wish I'd include the chart, but I sort of ran out of time. So basically, for disclosure, I did this presentation up yesterday, and then had to quickly update the charts as today came in. But as the data came in, because ran out of time. But I wish I'd included a chart on hours worked. So hours worked is a pretty pure look at it, because it's not affected by changes in participation, etc., and people moving in and out. And the hours worked across the labour market had risen really strongly up to December. So it had gone up, it basically hadn't quite made pre-pandemic levels in the trend sense, like that other employment chart, but it had gone up.
Sure.
In January, it did fall by about 8%. And that again reflects the, obviously the, cafes being shut, restaurants being shut, this sort of furloughing of workers.
Yeah. And I guess the workers I'm thinking of, your Coles employees and your and your cafe workers and all that type of stuff often are more likely to be casual. So when they're calling up and calling in sick and saying saying that they're not they're not going to make it, they're still employed. The worker's still only paying somebody for a shift. So the company's still only paying one person for a shift, or the cafe is still only paying one person for a shift. So it's not as if it's not as if they're paying more, but there are more people employed for that one role, if that makes sense.
Yeah, that's possible. Although if you look at the left-hand chart here, full-time jobs have actually risen stronger than part-time jobs over the pandemic. So so since the pandemic hit, over the roughly 2 years, full-time jobs are up 2%, 2.3%, part-time's up 1.3%. So you think that if there was more casualisation happening, that, like, say if you're a cafe, you usually has 5, casual employees on the roster, now you've got 10, but they're all working less, because you've got that thing, you think you'd have more part-time jobs going up. And in fact, they've actually risen at a slower pace than full-time jobs.
So
which I guess
that big drop in the part-time jobs, what was
lockdowns.
That's a lockdown thing. Okay.
Yeah. So obviously, so part-time's also casual. So it's just the way the ABS does it. They have full-time, part-time's everything else.
Yeah.
And you can see the big slump in each of the the national lockdowns. The first big dip. The second one's the Victoria, New South Wales lockdown, and ACT last year.
Yep.
And each time they've rebounded. So you get a lot more volatility in the part-time. Purely because the jobs, can be cut and then brought back a lot quicker, because that also captures casual.
Yeah.
Um,
Yeah.
Interesting stuff.
We've got a viewer question here from George. So he's asking, do dates play a part in the job market demand? And he's saying he knows a lot of people who aren't vaccinated, who have lost their jobs, and thus are effectively locked out of the job market.
Yeah, and that's certainly that would be affecting some portion of the labour market for sure. So we know that we lost quite a few health workers when the vaccine mandates came in. There's been, I actually know personally someone who left the labour market, although as I said they went back because they actually got the virus, so they were then classified as not having to be vaccinated, which is weird. But yeah, that would certainly be restricting labour supply to a certain extent. But it just shows you how strong the labour market is, in that the employment to population ratio, despite those sorts of factors, and it still hit the highest level on record. So it just goes to show that there's still, there's probably hidden unemployed. So people who've been out of the labour market for years, maybe decades, have been able to get a job and rejoin, because employers will basically hire anyone now because they have to, which to me is a good news story. And we've seen this also in the US. So now there's actually a big boom in convicts getting jobs. So like ex-crims. So there's been lots of reports about how employers are now turning to ex-convicts to fill their labour shortages. And to me, that's actually a good news story, because there's nothing more wasteful for an economy than unemployment, because that's someone sitting idle who could be working. It also robs you of tax revenue, and also means you got to support them. So if you can bring them into the labour market, means you get more tax, means you get more tax revenue. You don't have to support them as much.
Yeah, and for personal reasons,
Oh,
for
yeah.
the people involved as well. It's
Yeah.
people like having things to do rather than sitting around doing nothing.
That's
Okay,
right.
so vacancies. So
Oh,
yes.
yeah, this is great. So here I am. I sound like a nerd going, yeah, this is great. You really get into this stuff. But yeah, so that the ABS monthly labour market data's one thing, and that's a pretty good news story. The other one is the ABS also does a job vacancies data, and so do private surveys like Seek, etc. And what the ABS shows is, and the data's only to November, but it shows that we've got the highest vacancies by a long margin on record, which is a left chart here. You can see that they've gone through the roof in the private sector and total. And what I've done is I've actually presented the same data, but I've done it as a ratio of unemployed. So the number of unemployed and underemployed people per job vacancy. So I've sort of spliced the two series together. And you can see that we've got the lowest ratio of unemployed and underutilized. So underutilized is the unemployed plus underemployed per job vacancy on record by a long shot. So effectively, we've got plentiful job vacancies and way less people to fill them.
Yeah,
It's just another sign of the just how tight the labour market is right now.
Yeah, and the thing with this one though that always strikes me, and I don't know what the right adjustment to make is, but I do feel as if it's a lot easier to put a job ad out now than what it used to be, and potentially and cheaper, and you can put it on multiple, you can put it on multiple platforms, and Indeed, one of the big job ones, is actually free to put up job ads, and so
you can basically just go fishing now, can't you?
well,
Like,
I guess that's the point about saying, if you're comparing, this is a bit that always, I feel as if there's probably more job ads put out now because it's easier than what you might have what you might have had 30, 40 years ago.
Oh, absolutely.
And
yeah, I agree 100%. And I reckon the data's biased upwards by that, but at the same time,
there's no denying how strong it is. Yeah,
especially the change over the last 2 years. Like, you can just see it's gone completely vertical. So, but I reckon that's definitely a long-term factor, and I reckon you're right, because it is so much easier now, and because it's so much easier, there's probably more jobs getting filled and advertised, whereas previously they might have been sort of advertised informally.
Or stick a sign up in the shop, or exactly, or ask your
employees. That's right. Yeah. So that wouldn't be captured in these sorts of things. And Seek actually put out their latest January job vacancies report today came out this morning, and that showed that they've got the highest number of vacancies on record in their 25-year history. So it's, this is obviously the ABS's measure. Seek, a private sector, providers done the same. Indeed, another one, similar kind of story. It's pretty much, universal across the board that there's just, oodles of vacancies, job vacancies, and obviously, given the labour market data, there's less people to fill them. So we've got this multi-generational tight labour market, certainly the tightest in my lifetime. In
so
my young years.
What can pop this? So immigration.
Yeah. So what I've done here is I've been arguing for 8 years that effectively Australia's high immigration program that got ramped up massively in the mid 2000s is basically, kept us. It did keep Australia's unemployment level elevated and also subtracted from wage growth because it kept so much slack in the labour market. I was sort of laughed at for years, and so I guess I got a bit of comeuppance now, I suppose. And the data.
Can I simplify the argument a little bit for this? Is that that because I know that you've obviously been. There's some people out there that say, "Oh, all immigration is good immigration," and I say, "Well, okay, well let's bring 10 million people a year into Australia," and they're like, "No, that's too much." And you're like, "Well, okay, well, so we're not arguing about actual levels. All we're arguing about is how much is too much, and is it? So it's not 10 million, it's not zero, it's somewhere in between. We used to run at 100,000 a year. We've been running at 200,000 plus a year for the last few years. Is 200,000 too much? Should it be closer to 100,000? I guess.
Which is basically my argument. Just go to pre-2005 levels. It works for everyone. It's great. And we never had complaints about it being too low. Well, apart from the business lobby, who always complains. But back then it was no one complained about this stuff. It was just and then suddenly it just got ramped up. It went up 140%.
The other one you need to throw on that. The other thing you need to throw on that graph though is that the one that we saw Jared Minak had it the other day about the amount of government capex spending. It's basically in reverse. So you used to spend, I think it was 10% of GDP. Yep. And then as our immigration ramped up, the amount of capex we were spending fell. So the reverse, rather than actually saying, we're bringing more people, we need to go and spend more. So
totally. That was a brilliant post of his. It's on Macro Business website. Just search for Jared Minak. It was published, I think, on Monday. It's brilliant. And Damien's 100% right. So back in the 50s and 60s, when we used to run, high levels of immigration comparatively for the time, the government spent 10% of GDP on public investment. Now I can't remember the figure, but it was about a fraction of that, like 2% or something. I don't know. It was hardly anything. So what I've done here is I've got the sort of two measures of net immigration. So I've got obviously the official net overseas migration, which comes out quarterly, and also the monthly net permanent and long-term arrivals into Australia. They both track very closely. And what you can see is Australia went from averaging about 230,000 plus immigration a year over the previous decade to suddenly losing about 80,000 migrants a year. And what that's meant is that on the right-hand chart, I've showed that the labour market, if it was following the pre-COVID trend, it would be growing at about 25,000 people a month. So effectively, you have all these migrant workers come in, that adds to labour supply, so your labour supply grows by 25,000 people a month, or your population aged over 15, which is a pseudo measure for that.
And actually, just as a matter of interest, so is the number of people leaving Australia, has much changed in terms of that, or is this?
No, well, effectively, the loss in immigration has been a loss in temporary migrants. So we had about 500,000 leave over the past couple of years, and in fact, the permanent migrant intake stayed the same because we've just handed permanent visas to people who are already here. So this is all the net flows all temporaries. But effectively, because the immigration's turned negative, the labour supply hasn't effectively grown over the last 2 years. And the chart on the right shows you what it would have been had it continued the pre-COVID trend of 25,000 a month roughly, and versus what it actually is. And by my calculations, Australia would have over 450,000 more working age people in the economy if the pre-COVID level of immigration had held. So basically, to sort of get back to brass tacks, if you're going to have 450,000 more people in the economy working, obviously your unemployment rate's going to be a lot higher unless they create way more jobs. Now, so there's been this debate about, some people say, no, it's all because of stimulus. It's got nothing to do with immigration. It's like, no. The rate of job creation is below the pre-COVID trend. Yet we've seen unemployment and underemployment collapse. Why has it collapsed? Because the labour supply hasn't grown. And if it had grown, the pre-COVID level, we'd obviously have much higher unemployment and underemployment because you'd have so many more workers in the economy trying to get jobs. It's pretty basic statistics.
Yep.
And it's basically irrefutable because it's there in the data.
Okay. So we're throwing the borders open pretty much now.
Yep.
I guess the big question, well, and I don't know if you had the answer, but it'd be interesting in your speculation is, we've come into a more uncertain world, I guess, in terms of I guess 5 years ago, there'd be a lot of more people that think, yeah, look, I'll move to Australia or I'll move to wherever, and I'll find myself a job, and I've got enough money to last a few months, and I'll pick up a job, and then I'll go. Whereas there's this part about, okay, I might get caught in a lockdown though, and if I don't know anyone, I haven't got any family to fall back on, and I haven't got any support systems, then do I want to be in a different country, and I won't get government benefits, and so I guess there's more uncertainty, and so the border's been thrown open, and also I guess the way we've treated some of the people who were here, and there's obviously a lot more tension between Australia and China than what there was, and a lot of the migration was coming from China. Do we go back to that 200,000, or is it actually a lower number because there's just not that many people who want to come?
Yeah, 100%. So I've been having this. I've been thinking this a lot myself for all the reasons you stated. Also because some other countries are competing harder with us now for migrants. So, for example, Canada, they want to have 400,000 a year. The UK not competing so much for migrants, but they've made it a lot. Become a lot more generous for international students to work in the UK while they're there. And because of that, Australia is going to face a lot more competition. So one of the main ways that Australia brings in migrants is through the international student trade. So they're effectively the tip of the spear in this. They come in, study, end up working, then a lot of them end up taking up permanent residency and becoming a long-term resident. And now
there's a path to it, isn't it? It's the idea is that the path to immigration is much easier if you're somebody young in wherever, India, or pick whatever country, and you wanted to come to Australia and work. It's far easier for you to come and study for a period of time and then get permanent residency than what it is to do a degree at home and then try and come over afterwards.
Oh, 100%. It's a lot easier. So basically, you can come over. You can at the moment. So the federal government's loosened restrictions. So you got unlimited work rights at the moment while you're studying. You then can get a 2 to 5 year graduate visa, which gives you unlimited work rights, and then hopefully by that stage,
there's a pretty well trodden path to permanent residency.
Yeah, absolutely. But the difference is now that Canada and UK, who are two competing markets, are now also offering similar. I mean, the UK is not offering as much to become a permanent migrant at the end, but they're offering the generous work rights, and Canada is making it very easy to go over there. So Australia's facing more competition. So we've got the issue obviously with the whole China issue. We're probably going to get less from China anyway, but then you've also got these other markets who are competing harder, which is going to make it harder to bring in migrants here. So you can kind of see it in the desperation of the federal government. Like, I think they've set a target for 200,000 foreign workers by July, but I've got nothing to prove this, but my feeling is that they're struggling to meet it because they've now offering to waive visa fees for students, backpackers, etc., which to me is a sign of desperation that they're not coming.
So how often do we get these stats coming out, and where do they come out?
So the net overseas migration data doesn't come out. It's very lagged. It's like really 6 months lagged. We get temporary visa data is also lagged. So the latest we got that is for December quarter just came out recently, and there's been reports there's been a bit of a bounce back, but it's more the government's actions. They seem to be becoming a bit more desperate. to so like waiving visa fees, extending post-study work rights, allowing international students to work unlimited hours while they're here, whereas previously they were capped at 20 hours a week. All this sorts of stuff just kind of signals that they're trying a lot harder to fill the hole, and that maybe it's proving harder than they expected. But this is speculation. This is me reading between the lines.
Yeah.
But you know,
well, and also as well, we've only really just opened up, I guess, more broadly to people, and you know, there's so there's still uncertainty. I think there's still a fair bit of uncertainty around. Okay, will things be reversed? Yes, they say it's this way, but can you trust them not to reverse it? I buy my ticket and then 2 weeks before I'm about to go, there's something else happens and there's lockdowns.
There's a new outbreak.
Like that. So
yeah. Yep, they change. It does. There's kind of a bit of a sovereign risk, I guess, with Australia now, with this whole thing, and just the broader, risk aversion, I guess, that's been brought on from COVID. I think international travel everywhere is going to be less than it was before, not just in Australia, but probably elsewhere because of this. So anyway, it'd be interesting to see. But I guess the point is, if they do manage to reboot it really quick, we're going to get this strong rise in labour supply, and obviously that'll undo some of the gains in the labour market tightness, which I guess brings us to the next bit. I did a chart. I just want to put it in here, the next slide, which we can probably skip over pretty quickly because I've just discussed it. But this came from Gareth Hutchins. It was he did a beautiful explanation of why the collapse in unemployment is due to the closed borders. And what he effectively did was he's plotted the working age population growth in the dark blue line against the employment growth. And what it effectively showed is through the whole 15-year period pre-pandemic, we had the working age population growing at a faster rate than the employment growth, and as a result, the unemployment rate rose. Since the pandemic hit, we've had actually slightly negative jobs growth. So that's in the shaded grey bar, but obviously the working age population growth's fallen sharply, and that's why unemployment's fallen. It basically just summarised what I said. He just had a different way of showing it, which was good. Especially when you engage in these debates publicly, it's good to have someone have your back. So yeah, getting back to the next chart, this is I guess the crux of the issue. In a really tight rate labour market, you'd expect to get wage growth, and what this data here is plots is I've plotted the underutilisation rate, so that's the unemployment rate and the unemployment rate. So the underemployment rate and the unemployment rate together is the underutilisation rate, and that has historically been negatively correlated with wage growth. Now, this chart on the left, it might look a little bit confusing to you if you're looking at it and going, hang on, wage growth's going down. It's because I've inverted the wage growth on the right axis, just so you can see them side by side. And on the right, I've done a correlation sort of scatter chart between what different levels of underutilisation means for wage growth. And effectively, as you'd expect, the lower the underutilisation rate means a tighter labour market, which means more wage growth. So at an underutilisation rate that we have at the moment, which I should know this off by heart, but it's 4.2% plus 6 point.
11% on that graph, I think.
Yeah, 11%. Yeah. Sorry, I had this memorised.
We haven't got the data point on here, have we? So we're 11%. So 2% would be a bit over 2% now, but that's the sort of miles off that line.
Yeah. So the reason why I didn't put the red dot in is because I actually put these in yesterday before this later. I didn't have time to update it, but so basically, you'd be expecting to have this rate about 4% wage growth if it was sort of following the historical thing. But at the moment, the wage growth was 2.2% in the September quarter, which is the latest. So you think based on this, based on the way the labour market is now and the data is now, you expect to have a pretty decent pickup in wage growth, which is obviously would be a good thing. But then if we go to the next chart, the next slide, which I guess is the crux of the matter, that
Leith,
then has implications for interest rates.
Explaining to everyone what the difference is between the underutilisation rate and the underemployment rate?
Yeah, so the underemployment rate is a subset. So the underutilisation rate is the unemployment rate plus the underemployment rate together.
So,
The
underemployment is, yeah. Oh, sorry. Do you want to explain that?
Yeah. So the underemployment rate is basically people who are working but they want more work. So they want more hours. They want more jobs that work in part time when they want to be working full time. It's another sign of labour market slack. So people who want to work more but can't. And the wage growth is really highly correlated against the underutilization rate. And I could have just put the underemployment rate and it would have shown almost identical two charts. So I just chose this because it's a broader measure, but effectively the correlations are the same. And surprisingly, wage growth's not well correlated with the unemployment rate on its own. So yeah, the underemployment rate is tracking close to its 14-year lows, and underutilization rates tracking at around 14-year lows. So either way, and given the obviously job vacancies as we saw earlier, the labour market's really tight. So wage growth should accelerate based on that data. But again, it gets down to, how quickly we can, I guess, open up the borders and bring back the competition from foreign workers and increase labour supply, etc. The reason why it matters is obviously the RBA said repeatedly that it won't raise the cash rate until wage growth lives above the cash rate until wage growth lifts above 3.3%. And as I said, it was 2.2% in the September quarter, which is the latest data we've got. So effectively, we've got a tight labour market, wage growth should rise. And if it does rise, and it does lift above 3%, we should get interest rate rises. It's as simple as that. And if it does, if it doesn't, we won't get interest rate rises. So the way I see it, the labour market's kind of inextricably linked to population policy or immigration policy. If you can, reboot the very strong immigration, you're going to get, re-implement. You're going to loosen the labour market, get a lot more labour supply, lift the unemployment rate, lift the underemployment rate, and you're going to take the pressure off wages. But which means you're going to take the pressure off interest rates. And we saw that pretty much the whole of the last decade, where we had really poor wage growth. We had the labour supply growing faster than jobs growth, as Gareth Hutchins' chart showed earlier. And as a result, we end up with a higher unemployment rate, underemployment rate, and low wage growth. So we've kind of got this this issue where the government wants to bring in the workers real quick to dampen wage growth, to dampen interest rates. But can they? I guess that's the big question. And is it desirable? I guess is the other one. Like, do we want to see? Are we willing to sacrifice high interest rates for higher wage growth, or not? That's a question we've got for policymakers, I guess. So yeah.
Yeah.
That
so we've
end
got
of
a
presentation from my side, I guess.
Yeah, we've got a couple of viewer questions coming through. One is asking, why does Australia emphasise importing skills instead of educating and growing our skill base at home?
Yeah, that's a good question. I think we should always focus on education and growing our skills base. I think one of the problems Australia's got is, and this might sound controversial, but I think we've got far too many people going to university, not enough people doing vocational education. So that's resulted in this skills mismatch in the economy. So we're pumping out more graduates than we ever have. The percentage of young people at university now is, it's nearly 1 in 2. And I sort of think, well, do we need? Does everyone need to go to uni? Like when they could be doing vocational education training, TAFE, etc. And that's sort of where more of the shortages are anyway. So I think we've got, we could argue that, yeah, we are training these people up because we've got so many going to uni, but we're not training the right stuff. And I'd personally like to see, TAFE get funded better, vocational education get funded better, and less people going to university. I think we'd be a better economy for that, to be quite frank.
But the other thing which you've spoken about ad nauseum on, over the years, but is that we've now got universities who are university administrators who are now financially incentivized to bring as many people through as possible. Whereas,
absolutely,
20 years ago they weren't. So
and I think we're having Salvatore Bapones on next week, so we can tease this. He's an absolute expert on this stuff. Yeah, absolutely. So we've got this situation where basically universities become an immigration factory, where effectively we got these vice chancellors earning $1 million plus each, massive bloated, executive departments, administrators, departments, etc., trying to pump through as many as possible in order to maximise fees. And I question whether that's actually a good model we've got. And they're basically selling the degrees on the basis of work rights and permanent residency. Let's be honest. If we took away the work rights, they wouldn't come.
Yeah.
So
and incentives matter though as well, isn't it? It's just showing that if you incentivize your educators to try and give people at their universities the best possible education, then that's what they go and try and do. If you incentivize them to bring through as many students, and in particular high fee paying students from overseas as possible, then lo and behold, they go out and try and bring as many high fee paying students as they can, and
yeah,
education
and
standards are no longer important.
that's right. And it's not just high fee paying foreign students. We also saw obviously the demand driven university system under the Rudd Gillard government. So that massively increased the number of domestic people doing domestic students. And I guess my question is, we've got this skills mismatch in the economy where we've constantly got these skills shortages. We've had employers whinging about skills shortages all the way back since 2002, and they've whinged for 20 years despite the population growing by 6.5 million people over that time, mostly through skilled migration. And yet the skills shortages never go. And it's sort of
some
just
of those, but some of those people as well are, if you own a supermarket in a region that's already populated and you can jam 20% more population living around you, then you benefit. And if you're a property developer, and so it makes sense for all those guys to, there's a whole ream of people who have benefited over the last 20 years from this regime, and they're busy lobbying governments and paying their donating money and doing all that type of stuff to make sure it keeps going as long as it can.
Yep, spot on. But it's very strange. It is strange. We've got this, never any skill shortages, yet we're pumping through more, university graduates than ever. We've got people coming from all around the world to study at our universities and stay, yet we've still got these skill shortages that are chronic. So something doesn't add up. I guess is the bottom line.
And the other thing is, there are lots of skills that you just have to learn on the job. And so it's one thing to say, okay, oh, no, I don't want to bring a graduate on, or don't want to bring a young person on and train them up because it'll take me 6 months to get them up to speed. Can I just have somebody cheap who's already done the training overseas, or can just slot straight into the job? So
that's actually a fantastic point, because the big four accounting firms earlier this week, there was a big whinge piece in the AFR about how they're struggling to find workers, blah blah blah. But one of the positive side effects from that is that PwC, Deloitte, etc., have ramped up their graduate programs. So they're now one of the big four, I can't remember which one, said they've got 1,200 graduates they're going to employ this year under the graduate program, which is massive. And that's fantastic. And not just that, they're going to now open up satellite offices in the smaller capital cities and the regions instead of just Sydney and Melbourne. Well, I mean, how's that bad? That's a fantastic thing. When I left finished university in 1999, and I took my graduate position job, graduate programs were a foundation of the Australian labour market. Like, everywhere you went offered a graduate program. When I went to the Australian Treasury in 2003, they took on 80 graduates that year. Now you'd be lucky if they took on a dozen. And it's like that across all, ever since we've gone the big migration route, these graduate programs have all been either shrunk or disappeared, because employers are like, well, it's too expensive, or, it's easier not to train, give people a go out of uni, train them up so they, whatever. It's easier just to go and import someone on the cheap who's already got a couple of years. Now, I'd argue that that's actually detrimental to society. And we need to go back to making graduate programs, making apprenticeships, all those sorts of things are foundation of the Australian economy, just like they were when I left uni. And I think that'd make for a much better, it'd absolve us of these skill shortages, but also create, better career paths for young Australians. And the young Australians are copped it in the neck.
Okay.
The last 10 years.
Yep, let's seal that one off for a minute, because let's get to, we're almost out of time. I just want to sort of get to the nuts and bolts of it though. Is okay, so really strong job markets at the moment. Very heavily dependent upon immigration, whether it does come back or doesn't come back in terms of wage growth. Very heavily dependent upon interest rates, which We think, by and large, the Australian government, Australian central bank seems to be more dovish than what we're seeing elsewhere. And I guess potentially that's because we are reporting lower inflation, but also because our inflation numbers are so lagged compared to everyone else. It's, this can be hard to tell what's going on in Australia versus elsewhere. So your best estimate, are we going for? You saying, look, we won't get a lot more immigration, and we'll end up with this higher wage growth and be raising rates, or are you thinking it's more, other factors will get in the way, and wage growth actually won't be as strong as what's needed to really see liftoff?
I'm going to sit on the fence and actually admit that I don't know. It could go either way. The thing that gives me pause is that, I speak to Gareth Ed, the head of Australian Economics at CBA, and I sent him a text the other week and I said, "Oh, mate, are you seeing anything in your internal data showing wage growth picking up?" He said, "Yeah, for sure." So, unfortunately, we only have the ABS's data to look at, but at least Gareth thinks that the internal data is very strong, that he's seeing in the CBA bank accounts, his liaison, etc., which suggests that wage growth could actually pick up very quickly. And if that's the case, interest rates will rise quicker. At the same time, you're right. The RBA and the Treasury, I might add, Steve Kennedy yesterday, the Secretary of the Treasury, they both dovish in that they want to try and test to see how low they can get the unemployment rate before it actually leads to a pretty decent lift in wages. So I think they'd be willing to sit on their hands, even if we do get 3% wage growth. I think they could be willing to sit on their hands for a couple more quarters, for a few more quarters, and delay rate hikes just to see how much they can push it. And Phil Lowe's said that publicly, and so Steve Kennedy. So
and keep in mind the US made it into the threes, pre-Trump, during Trump, and without massive wage growth.
And we could also get easing of supply pressures elsewhere, which will take the pressure a bit off inflation anyway. So, but I do think wage growth is the key. Phil Lowe said it repeatedly that that wage growth is the key to sustainable inflation, as opposed to sort of transient things. So I guess all eyes on wage growth. It could go either way, and my gut feel, as I said earlier, is the government's going to struggle to meet its 200,000 foreign worker target by July. I think just by its actions suggests that it's because it announced that in late November. And since then, it's done all these sort of desperation type things to try and get it. It's agricultural visa, which is one of the ways I wanted to do it, is basically dead in the water. Been zero pickup from that. So obviously, if we don't get the reboot like they're expecting, well, that's going to mean the labour market's tighter, other things equal. The labour market's tighter and we'll get more wage growth. So I guess wait and see. It's something we can probably revisit in a few months. But I'm not really confident either way. I'm kind of taking a wait and see approach because I really don't know, to be perfectly frank.
Yep.
And Leith, another question's come through just on that topic. So why did it take the RBA so long to admit that migration was suppressing wage growth and the per capita economy?
I think it's political, to be honest with you. For years they were saying the opposite, and then last year they told the truth. And then, unfortunately, last week they've sort of backtracked a bit on that. They didn't talk about wage growth, but they sort of changed their rhetoric a bit. So, yeah, I don't know. I think the RBA's maybe the RBA is worried about inflation now, and it is worried about that. Oh, hang on, maybe we have got this wrong, and maybe they want it back so they can suppress wages and lower inflation. Who knows? But the data presented today in this thing, Gareth Hutchins, the ABC, it's irrefutable. We've had less jobs growth. The trending jobs growth is well below the pre-pandemic level, yet we've seen unemployment crash. The only way that's possible is from the labour supply not to rise like it was. It's basic statistics. So it's nice they told the truth last year, but they seem to be backsliding a little bit now.
Great, thanks for that.
Excellent. Oh, I think on that note, we might leave it there, Sam.
Yeah. So this is just the final call for any viewer questions, and now we've got our question of the week. So this is for viewers to have some discussion in the comments section over the coming days and week. So the question today is, are you expecting to receive a solid pay rise in 2022? So yeah, I guess from the data, we'd be expecting many people to be saying yes to that one. So yeah, feel free to post your thoughts and engage with us and some of the other viewers in the comment section. And I hope that gives some viewers some insight into the job market and what to expect in 2022. So that almost wraps us up. I don't think we've got any new questions come through just now. So yeah, Damien, Leith, have you guys got any final thoughts you want to leave us with?
Not at all. Just a great labour market. If you want a higher paid, if you want to beg for a pay rise, now's the time to do it.
Nice one. So, Damien, I just want to thank you for
doesn't apply to you, Sam.
I'll have to be asking the question.
Yeah.
I mean, you guys have put it out there.
Yeah.
So yeah, guys, Damien, just want to thank you for sharing your knowledge and insights as always. And Leith, thanks for coming on the show again. We really appreciate you giving your valuable time and expertise. We do welcome your feedback on the show, especially in regards to suggestions for future topics. If you do have any ideas, please drop it into the YouTube comments below or send us an email at contact@nucleuswealth.com. Just a reminder, this is general advice and does not take into account your personal situation. If you do want to discuss your personal financial situation, please go to our website at nucleuswealth.com and book a call with myself or the team. And for those of you that do want some more information around the portfolios at Nucleus Wealth, a great page to check out is nucleuswealth.com/portfolios. You can see our tactical, core, and passive portfolios. You can see all the returns data, the fees, information on how the portfolios are constructed and managed. So yeah, good page to check out there. Don't forget to like the video now. And finally, if you know of anyone that might get some value out of today's episode, we'd really appreciate it if you can please share it with them. If you'd like to see some more of our previous episodes and content, head over to nucleuswealth.com/content. And to stay up to date on news from us, you can also follow us on all major social media. So for myself, Damien, Leith, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next time. Bye for now.